Welcome back, folks. Welcome back. So the last time we talk about fair value gaps, invasion, fair value gaps, and stuff like that. Okay. So these things you are going to use them regularly, like almost every time, each and every time that you find out that there is a certain entry that I should be taken care of. And for the first, like for the first 1 year or so, you might not be profitable as you think. But through study, through back testing your strategy, you're going to see that you improve from one point to another. Especially when you begin, you don't need something like a get quick rich scheme, whereby you are telling yourself, if I just see a deposit this $10, then I flip it. No, there is nothing like that. You should use what we call risk management. Okay, proper risk management. You must use proper risk management. Okay, calculated risk built with fear destroys what opportunities. When you've got fear of losing, you are going to lose. That one I guarantee you are going to lose, and you are going to lose. Okay, but let's say just place your trades from your account. Then you're just targeting 1:2 ratio. You grow to a to a certain bank, to a certain extent. Don't over leverage. Don't over leverage, because when you are over leveraging, some of you don't have money for, you don't have capital to fund your account each and every time. So use the money that you have, utilize it, okay? Don't blow the account. Use the money that you have, and then master your strategy. This thing you can just do it on a demo account, then write down, okay, your trades. Write down, why are you taking this trade? What's the motive behind it? What have you seen whenever you are taking that trade? Okay. So everything must be written down. I saw if the market is going to come from this end to this end, okay? This is what I saw, this order block at a price of point of the correct time. Then I am expecting the market to move from this end to this end. How many entries you are going to write it down? When that trade fails, okay, you then write down like this trade fails because of this and this and this and this and this and that. Okay, this is in this scenario. Yeah. Okay. You was thinking that the market is going to use this this favor like KPA, okay, to go what to go to the tunnel. Then it failed. You need to accept it that this favor like failed. Okay, for me to use it to take entries going to the lower side. But what can I do? What did I learn? There are so many things that you can use here which support this entry here. Okay. What do we have that we can use from this portion up to this portion that we can use, which will support this what? This price point. Okay. So we have got this law here. This law. Okay. Remember, this law and this law, they are becoming what? Are relatively equal laws. Okay. Then we have got this high. So from low to high. All right. So we have got this high here. This is the high that we have. Okay. So when you see this law being taken out like this, then you wait and see if the candle, if this high is going to be taken out also. Okay. When this high is taken out and the candle that took out this high is closing above this high, then you need to wait for more confirmation again. Then the market goes up and came down here, right? This is where my interest is. So from this low to this high, we have got what liquidity there. Then we have got what shift in market structure. Okay, this we have got shift in market structure. Then when the market came down, what do we call this from this end to this end? This is now a break. This one. This is now what? A breaker. This is now a breaker. Look at when the market was coming down, look at how it respected the midpoint of this area. Look how it respected the midpoint of this area. And it what? And it goes up to this, taking out this high here. This might be your first sweet spot that you can easily use. When you take out this high here, you are going to let's say you've got like two contracts, you're going to take out one. Then after that, the next thing you're going to put your stop loss at break even. So half of the profit you've already collected it. Then you are going to put your to the point that you can think of the market is going to go there. Okay. As you can see, it goes and it goes up to here. So this is what we call a breaker. Okay. A breaker. This is what we call a breaker. And this one is a bullish breaker because it's supported price to go to that the upside. Just like that. So we have got bullish breakers and also have bearish breakers. Okay. So you need to go to your charts. There are a lot of things that you can use here. These are last down close candles, okay? These are last 1, 2, 3. This last down close candle before this move goes up. This one becomes what? Becomes an order block. These 3 down close candles here. It becomes what? An order block. These ones. Okay? As you can all see, this 1, 2, 3 becomes what? An order block. So we have got an order block here, and we also have what we also have a breaker here. So we have got two things that came together, and these two things are supporting price for us not to go lower anymore, but for us to go what? To go to the upside. I think you are understanding what I'm trying to say or what I'm trying to give you here. So for you to take an entry, you must have at least 3 things that come together that will support the idea that we have. So pre-confirmation first before you take any entry. You must have 3 confirmations before you take any entry. Are you getting what I'm saying? Let's go just for 15 minutes. You must have at least 3 confirmations. Okay? If you come to 15 minutes like this, we also have this Beverly gap here, which was used at this point. So you must always have at least 3. If you are going to 15 minutes, you're going to take this one and this one candles. Okay. So it will be your line, it will be what? It will be like this. So you need to backtest these strategies each and every day. Live market, okay? If you want to do a replay, you're going to do your replay and practice them day in, day out. They are going to click to your head. I assure you that these things, they are going to click to your head. So this is a breaker, and we also have what? An order block here. Okay. So These are some of the things that you can use. It will work in any time frame. Any time frame. It doesn't matter. It doesn't matter which time frame is it, as long as you see the characteristics of a breaker, the characteristics of an order flow. If that is made, then there is nothing else that you will be waiting for. What you will be waiting for what? There's nothing else that you will be waiting for. Because these things works in each and every time frame that you can think of. These are time frames. We have got 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes, 45 minutes, 1 hour, 2 hours, 3 hours, 4 hours, daily, weekly, monthly, 3 months, 6 months, on. Okay? So you need to pull up resources. No one is going to come and rescue you. No one is coming for you, and no one is good. Don't be a complaining machine. Always work for yourself. Learn to analyze these things for yourself. Learn to write down notes on in each and everything that you are seeing. Learn how to do it. Your soul. No one is coming to rescue you. So don't be too shy to write notes, or don't be too shy to listen to this several times. No, they are not going. No one is going to rescue you. Okay. So to me, you meet again, folks. It's bye bye for now. Thank you for your support.